Thushka, Barclays thought that it may only be a stock market crash that brings bond yields back down. What do you think? What do you think could bring yields back down to, say, let's call it, say, 4%?
Yeah, hi there. I'd say the main factor we would look for would be economic drivers. So you'd need growth slowing from its significantly above trend growth level to get yields lower. I'd say a few other things that have been factors pushing up yields. One, this idea that negative carry on holding durations made it harder to hold. We've had obviously position unwinds, as well as basically the resilience in the U.S. economy preventing the Fed from pausing its tightening cycle, or at least sounding less hawkish. And I think all those factors are now likely to moderate. But I'd say the biggest driver for all of these moderating, whether it's bond volatility, the negative carry, or the Fed talk, would be growth slowing from current very extremely resilient levels.
Thushka, it's Alex in New York. It's good to see you. Does that equate, though, to a crash in the stock market?
Well, that's an interesting question. Exactly, Alex. We're not expecting us to go linearly from strong growth into recession. We're expecting a moderation of growth in the coming quarters to slightly below trend. And in that environment, without a recession, it's very hard for us to be very negative on equities. We're more neutral on global equities. Hard to say that you have equities sell off sharply without a significant slowing in growth. And we're not in that camp. We're just seeing a moderation. What's interesting in the equity market is why haven't they sold off more, given the rise that we've had over a 30 basis point rise in yields in the last month. Why haven't equities sold off more? It's because growth has held up extremely well, and bond markets are pricing in the better growth outlook, and policy obviously being higher for longer in that better growth environment. So, without having growth slowing very sharply, it's hard to see equities selling off very significantly.